Happy 2025, everybody. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the first currency room of 2025. I love the start of a new year. And look, just because we went from the last week of December to the first week in January, nothing has changed. But we have to measure by year, or by month. That's just how we are as humans. So I really love to basically put a bow on 2024. And the thing I love about turning the page is that I always love to say the market doesn't remember what you did last year. It doesn't care. If you killed it, it's not impressed. It doesn't even remember. If you sucked, well, guess what? It's not going to remember. You should do the same thing. In your mind, you should be like, great, pat yourself on the back, or say, hey, let's not be an idiot this year. Forget it all. None of it matters. All that matters is where we are right here, right now. So let's start off 2025 with a bang and let's get into it. So this last week, we actually saw some selling. We've been talking about seasonality patterns, specifically the Santa Claus rally, and it didn't really come this year. Now look, the numbers aren't completely in yet. We still may have gotten a positive for the last 5 days of December and the first 2, because we are getting a pretty big rally here on Friday, but it definitely was not a wonderful period of time. We had a negative month in December, and we actually started a little bit with losses for the year. That being said, we'll look at the charts, and you can see nothing really changed on the charts, not one single thing. The dollar and bond yields remain strong, so that hasn't changed. Sometimes we look for rotation at the first of the year. Sometimes the things that were the strongest, they turn around to be the weakest. Well, guess what? That did not happen with the dollar or with yields. They stayed very, very strong. And then we did get a pretty good pullback in crypto. We'll take a look at that pullback and see if it's actually able to be bought. There was not a lot on the calendar last week. I really only want to talk about 2 things. We had Chinese manufacturing that has popped above 50. 50 is the line of growth or contraction. And you can see that this non-manufacturing services actually up to 52. So the Chinese economy, for the first time, is looking like it's on a stronger footing. And then we got U.S. manufacturing, and you can see those numbers were much, much better than expected. We did see a tick up in the prices, which is going to be, again, a little bit inflationary, which means that the Fed is less likely to have more rate cuts. Not a lot to talk about, so let's just go look at the hard numbers of the week. So last week, if we take a look at the numbers here, the S&P was down, but we had a big rally on Friday. So we had a nice 1.3% rally on Friday. So things were still down, but definitely off the bottom. Crypto had a nice rally led by a huge jump in Litecoin. Bitcoin really didn't do much. Gold, flat, oil, nice run a little bit higher. Let's take a look at the S&P chart and see where this puts us. It doesn't put us anywhere all that special. So we are still below the moving averages. So we're looking at the S&P 500. We are still below the moving average, the 50-day moving average and the 20-day moving average. So we've got, that is slightly bearish. That being said, we held a very, very key support line. Very key support line. We held it. So at this point, it is not a downtrend. But at this point, it is also not an uptrend. We've got some lower highs. So if we take a look at where we are here, we've got this lower trend line here. We've got this trend line here. We're in between these 2 points, and until one of these 2 points breaks substantially, it is just sideways. We can't really say with technicals what is likely to happen until one of those points hits. So let me put on some hard numbers on this. 58.30 on the S&P, a break to the downside would signal we are in a bearish market. If we take a look at somewhere around probably 59.80, 59.75, somewhere in there, that trend line, if we break above that trend line and hold it for a day or 2, then that is probably a signal for the next bull run. And this was nothing more than what's called a bear flag pattern. Big run up, you have a lazy little downtrend, and then you break out to the upside. It means that at this point, we have no strong call on equities. What did that mean for the currency market? Well, we saw the dollar and the yen both jump higher, and the European currencies that had been the strongest currencies through all of December they took a break. So this is where we need to take a look at the technicals and ask a question. The Swiss franc, the euro, the pound were all in uptrends. We had this kind of movement this week. The question is, was that the end of the uptrend, or is this a great pullback to get into? And then we kind of have to come over here and ask the same question, especially with the Aussie. The Kiwi didn't really have a bounce, so we can pretty much say the Kiwi is still bearish, but this Aussie had a nice bounce. Was that the bottom of the Aussie's downtrend? Or is this a bear rally that you can short into? We're going to take a look at all these charts, and we'll definitely have an answer for you on that. As far as crypto goes, as I mentioned, Bitcoin didn't do much. The big gainer was over here with Litecoin and Ethereum. Had nice gains that pulled up the group, but Bitcoin pretty much stagnant on the week. We took a look at the markets. We took a look at the performance. Let's take a look at interest rates. Here is the U.S. 10-year government bond. Ran up, pull back, and look at this. We did not break down below that previous level. We are holding that. That tells me that we are at least going sideways with rates, if not higher. This is very supportive of the U.S. dollar. Ankit, you do a lot with bonds. What do you think about the bond yields here? Think they're going to go sideways, or think they're going to keep going up higher to 4.7, 4.8?
Hey, Rob. Well, that's a good question. Again, if I just take a look at the bond market and again take a look at these charts, they are pointing it to higher. And I think if you really look at the expectation where we were just 4 months ago, we were looking at 4 rate cuts for 2025, and now the expectation for rate cut is about 1. So I think that's a big shift that taken place, from September, October, all the way to now. So again, with the data that remains strong, and I think that's where the yields likely to climb higher, and I think that's why we're seeing the dollar just remain strong as well. So until or unless the data start to come out weak, I think the yields likely to stay strong or tread higher. And I think that's something that is going to be sort of a headwind for the equity markets as well, as everybody's now started to focus on this as well. So I think we are in this interesting period here where everything is looking fine, everything is strong. The expectation are way, few for these rate cuts. I think that's all that environment is really supporting the stronger bond yields and stronger the dollar. So I think that's really where we are unless anything changes. I think we'll probably tread higher here.
I completely agree, which means anyone who's been licking their chops for a dollar short, keep licking your chops. It is not around the corner whatsoever. Here is the crypto basket, our 4 cryptos we look at traded evenly. If we just take a look at the trend here, okay, we had downtrends, lower lows, lower highs, but we did not make a lower low this last time. Now, of course, this is the first sign of a potential trend change. The first sign is a potential trend change. What we need to do now to really have a good trend change is we have to break out of this level, pull back, retest it, hold it, and then move higher. If we can do this price action, I will get bullish again in crypto. But until that happens, this is not the right time to trade cryptos. Over here was the right time to trade cryptos. This is the right time to trade cryptos. Right now, we are not there. We don't have a confirmed strong uptrend, so we're just going to back off cryptos here for a little bit. We do start to have a lot more news coming out that the holidays are over, so let's jump into it. We get some CPIs out of the Eurozone, German CPI, and Swiss franc CPI. This is definitely going to be moving the euro. No question about it. I would expect that the German CPI probably comes in as expected, but that Swiss CPI has been weak. This could be a miss. The Swiss franc still has lots of strength in it. I think a miss on this number could potentially cause the Swiss franc to turn bearish. I think it's way too early to speculate on that. So we're just going to have to wait and see, because even if it has a couple down days that are negative, you'll see in the charts, it is still pretty far from a bearish market. Then we get the CPI from Australia. So major CPIs coming out this week across the board. And then on Friday, we have employment reports from both the US and Canada. So this will be the December. And you can see they're looking for 154,000 new jobs. That's a moderate number. That's not hot, that's not cold, that's a moderate number. If it's above 200,000, that's going to be a hot number, meaning the dollar's likely going to go higher. The stock market won't like that. Anything below 100,000, the market probably likes. Anything negative, the market hates. So as you can see here, it's the whole Goldilocks thing. We talked about this, 2 years ago when the numbers were coming out, not too hot, not too cold, just right. That's what these numbers need to come out at to keep the equities from substantially turning lower. So this week, just CPIs. CPIs out of Germany, CPI out of Swiss franc, and CPI out of Australia, and then the employment reports on Friday. Let's go ahead and look through all of the currencies that we trade. I'll start with the cryptos, and Anka will take us through the Forex. Now, I have been pretty singularly just on Bitcoin. I've been pretty focused. That's where I want to be. And I said, look, if you're not going to trade Bitcoin, then you should probably be in Litecoin. As you can see here, if we take out that little blip that we saw in the middle of December, we had 3 days of a breakout, and then it sunk right back down. If we kind of just take those out, we can see that we're in a base here. 92,000 is the bottom, and probably 101 is the top. We'll take a better look at this when we get into the individual charts. It's basing here. If we can break out substantially above 100,000 again, I can make a case to be long Bitcoin. But until that happens, I cannot make a case. It's running up to the top of the range. There's no question we'll probably get there. But what happens at 100,000? If we break through and run, I would love to see, again, breakout, a pullback. I would love to buy that pullback. I don't think I want to buy this breakout because we still have a really strong overhead resistance up here. I'd love to see a run, a pullback to buy that pullback. So that's really what I'm waiting for in Bitcoin. You can see that's going to be at least a week away for that pattern to develop. Over here to Bitcoin Cash, we are below moving averages, so that automatically disqualifies it for me. Until we get back up above that 50-day moving average, it cannot be bought in my trading system. Ethereum is just barely getting back up, and it's actually leading a little bit. As you can see, we poked our heads back up above that little last resistance, but we still have a lot of overhead resistance up here. I'm not quite sold yet that there's going to be a new bearish run on crypto. I think there's a lot of things that have to go right. Here is Litecoin. Litecoin has done the same thing. Come down. We did not make a lower low, and now it looks like we're trying to bounce up a bit. But I need to see runs, pullbacks, runs, pullbacks. I need to see a more mature trend before I get bullish here in the crypto market. It could happen. I just need a week or two for the trends to develop. All right, Ankit, take us through the Forex market. Let's start with that dollar.
Absolutely. Well, let's just start with the good almighty dollar, and you can see that this thing is slowly creeping higher. And, as we were just talking about the bond markets and the dollar, and interestingly, the bond markets did pull back in the last couple of weeks of December, where this dollar just stays strong. So now we are seeing a bit of a surge in the yields, but the dollar is just kind of holding steady. So what is it telling us? Well, it's just telling us that maybe the dollar is taking a little pause, but it's no shape or form. Dollar looks like a good short here. It is in this upper band. I mean, if you take a look at the resistance that I've drawn on that chart, now that's a 2022 high. And we remember what was happening in 2022. The U.S. was raising interest rates, and that was the key level where it topped out before dollar had a pullback. So I think as we take a look at that level, that's a very important and significant level here. So we might just tread waters here. We might just go drift sideways here. But again, I don't think the dollar is a good short. Maybe it's a good long on pullbacks. But just keep in mind, like that's what we're dealing with the dollar here. It's a stubborn one-way move, and we might not be going parabolic as we have done in the last 3 months. Maybe that curve will slow down, but I still think that dollar is not a good short here. And then based on the velocity, you can see that we're kind of going sideways here. But overall, I only like dollar on the long side, but not as much on the short side. Now let's just go into the yen, and I think the yen is where we can see that potential, especially if as we're looking at the equity markets. We're seeing the equity markets kind of being unclear here. And let's just say that if the equity markets does pull back further, I think that's where a flight towards safety, yen will likely do better. There's also expectation for Bank of Japan to make some changes. In January, we'll see what happens in their next meeting, but I think yen does stand a chance for a slight move higher. And again, just looking at this week, we saw the yen did outperform the dollar. So I think if the dollar sort of plateaus or kind of goes sideways a little bit, I think yen can do really well here. So I do like yen Rob on the long side. I'm not sure what your opinion is, but based on the chart, I don't love this as a short either. Until it really breaks that key support area, that the level where we just start to rally. I only like this if it really breaks that level. But for now, I think if it gets above that 20-day moving average, I do like it more to the upside than I do on the downside.
I agree on that last part. My rule is I've got to have moving averages that are they're sloping higher, and this yen is nowhere near that. I mean, one moving average is sloping lower, one is basically flat, a little bit higher. I need to see these moving in tandem. So for me, the yen is off the shelf 100% until that happens.
Yeah, I think it's worth keeping a close eye on the watch list here. Now let's just go into Swiss franc. Now, European currencies were did well, and we talked about rotation, as Rob said. We see rotations, especially going from the year end into the new years. We didn't see a rotation anything in the dollar, but we did see some rotation coming in the European currencies like the euro, Swiss franc, and the British pound. And on the contrary, we saw the growth currencies like the Aussie especially did well. So the question is that, like, the same question: do we continue to pull back from here, or do we rally from here? So personally speaking, I think as the dollar stays strong, we probably see the growth currencies pull back a little bit further. I think that's where I'm looking at Swiss franc, especially towards that bottom end of the range. And remember that Swiss franc range that we are looking at is almost a year long. We saw this range that started like last year, but it's kind of held on that range. So I still like Swiss franc in that range bound until we get that break, either one way or the other. I think is going to be a big good move. And now going and looking at the inflation numbers that we have coming up, I think that will be a good catalyst. Now here we are with the euro, kind of the same boat. It did well in the last month of December, and we're seeing that rotation taking place here. So I think next week is important. We're seeing a little bounce today. If that bounce gets sold, then it's going to be a clear indicator for me that the euro wants to go lower. So I think that's what I'll be looking for confirmation next week. Now, looking at the pound, it's the same way. We got that big drop. You can see like that came out of nowhere where the pound was looking pretty good. There was no news, and that was what we got. So we got a bit of an inside candle today, and again, same scenario. If this candle gets sold, if we start to see a rollover from this today's gain, I think that would be a good precursor that the pound actually wants to go lower as well. So on the velocity, you can see that we were low basing. We're sort of rallying a little bit here, but again, I'm being cautious of the European currencies, especially if you're looking to buy this drop. I think it's still too early to make that call. But if it does roll over, I think that will give me more confirmation that these European currency wants to go lower. Now we can go move into the growth currencies and see where, okay, CAD, we had a big drop again today, but you can see that CAD is just kind of no man's land here. The CAD really deviated from the dollar, in the last few months, where we see the dollar CAD at the highest level since 2015. So I think CAD's in a no man's land here. It's just not really going anywhere. It's not the biggest. It's not the best currency. It's not the worst currency on a basket. So I'm really not interested in the CAD here. Now, Aussie and Kiwi, I think those are the ones that I'm kind of looking at here. I mean, look at how underperforming they were, and there is a bit of a surge coming in at the first week of this one. So again, same idea as we looked at the euro and the pound. If they do break or have a follow through from what we see today or this week, I think that would be a good precursor that maybe there's a rotation happening. And I think in that scenario, it might be worth taking a look at euro against the Aussie, pound against the Aussie, just the opposite trade what we're looking at. in the last last 2 3 weeks of December. So I think it's worth taking a look at it, but maybe they're bottoming out. But until they really break those key levels, either on the upside or the downside, I think it's worth sort of backing off on some of these currencies that are already kind of on the lower end of that spectrum. Same thing goes with the Kiwi. You can see that Kiwi is also sort of low basing. That's a very important level of support where we are just consolidating. So guarantee we are still in the downtrend, but we are in the consolidation phase in that downtrend. And until or unless we break that support or resistance, we might go sideways a little bit here. So I think this is where it might be worth taking a look at that rotation, see if the European currencies start to underperform there. As the dollar stays strong, as the yen stays, gets stronger, I think it would be worth taking a look at these pairings. But yeah, we're just going to look for some of the follow through what we got this week and see where is the next move for some of these currencies.
At the first of every year, I get very excited because typically the trading gets substantially better than what it was at the end of the year. Looking through these charts, I don't have that real encouragement that things are going to be awesome this year. Look, this week, I think the biggest question this week is the European pullback. Is it going to get bought? If the answer to that is yes, then I think it's a very easy call to make. I think you do the same trades we've been looking at, euro long, pound long, long against the Kiwi. I think that's just the no-brainer. That is where you go hunt. The problem is, and Ankit, I think you hit this perfect, is that there's these bull pullbacks that you get, and you say, oh, this is a really good bull pullback. It looks really good. And then there's sometimes you get one that just looks a little sketchy. It just doesn't look right. I kind of get the feeling about this one on the euro. So I also am looking at these European currencies, specifically the euro and the pound, and saying, hey, I need to see a little bit more proof that these aren't just going to roll over. And I think you pointed out that it sounds like you think they are going to roll over and we're not going to get new highs. Would that be correct?
Yes, I'm just kind of looking at this price action really reminds me of 2022. When the dollar was just really strong, and eventually, currencies start to break, and they took turns. The euro at that time, euro and pound were the weakest, and if you remember, like we almost hit parity against even the pound dollar before it turns, and the Aussie and Kiwi were just holding. And then as soon as that bottomed out, we saw the Aussie and Kiwi roll. I noticed they might be rotating, taking turns. But again, as long as the dollar stays strong, I see that potential of that rotation taking place where pound dollar probably had a lot more room to drop compared to the Aussie dollar, which is already at the key level on the support side.
Well, thank you. Let's go ahead and look at some of these potential setups here. So I do want to take a look at exactly those setups, Euro Kiwi and Pound Kiwi, and then I'll turn it over to you, Ankit. Let's go ahead and start off with the Euro Pound, because remember, whenever we try to decide which one's better, the Euro or the Pound, I'm here on a daily chart, and you can see over the past 10 days, there's been no difference in strength. That moving average is just flat. So that tells us we don't have to put in a lot of effort in our brains to figure out which is stronger, pound or euro, because frankly, they're the same. They're the same trade. So let's just go ahead and pair up euro versus Kiwi. And again, this is to me the biggest question. The biggest question here is we've got this, so we did break out of a pretty key level, even though we got this upper wick up here. But here we are. We poked up above that a little bit. We're pulling back here. This pullback, it's still very, very valid. I mean, you can really be looking at this area and being like, okay, if we get this pullback into this 182.50 to 183 area, that's a very viable bull pullback. That's a great level. And then again, you're waiting for there to be something like, a doji, looking for some sort of reversal, and then a green candle. And then all of a sudden now we need to see something like the moving average steepen up again. We need to see these parabolic SARs get broken. Once we get that signal, then we can get back on the long side. It's just, I think that's going to take at least 2 to 3 days, And this is a daily chart. I think we probably still have another day or two down. So let's call that Sunday, Monday. We get a reversal candle on Tuesday. Wednesday, we get a nice green candle. It's probably isn't until Thursday or Friday that we even can make a technical case to get into this. And Ankit is right. If we don't hold this level, if we come down here and we break, then all bets are off. All bets are off, and there's really no trade to be made here. I'll throw up the pound Kiwi, and you'll see it's going to look virtually identical to it. This is probably more of a high base than a pullback here. The same thing. Can you buy this pullback? Right now, we're getting some buying action, but it's not tremendous buying action. I think it's going to take another couple days. I'm looking at Forex right now thinking, okay, the number one question to me is, do the euro pullbacks bounce? If I want to go look for something outside of that premise, I'm sorry, but I've got to go with long dollar. I've got to go with long dollar, period. Now, I agree with you on the yen, Ankit, but I'm going to go back to that yen basket. I'm going to pull up the yen basket again. And you can see that we had this run. We came down, we bounced. So we are making some lower lows here and lower highs. This potentially could be a bear rally pattern. We're not going to know yet. And right now, we're not getting any signals that it is rolling over. No red candles. We need to see some red candles here. Some big red candles. If I can get, 2 red candles here on yen, I can make a case that the yen is going to break down below this last swing low and start to become a lot more bearish and probably make it all the way down to this lower level, or at least back down to this level of support. So I do like dollar yen. I don't think it's the greatest trade ever. I don't think it's wonderful. And you can see, looking at it on a daily chart, it is simply high basing. And right now it is a terrible trade because it's literally pinned between 146 and 158. Sorry, 156 and 158. If we can start to move out of this range, I think this could be one of the best trades of the week if that dollar continues to stay strong and the yen takes a sell-off. That's really all I'm looking at. I was much more excited earlier about the new year because I thought, hey, it's always better in the new year. I'm just not seeing setups at the moment. Ankit, what do you want to take a look at?
Hey, Rob. Well, yeah, I agree. I mean, we are kind of looking at the same thing. I think the only other thing that I kind of add in there is pound dollar. Again, I'm looking at, certain dollar currency pairs that have reached or hit those 2-3 year lows. I mean, this is the one where I feel like this one has a bit more room to drop. As you can see that we did drop from a key support area, just early this week. But, if it breaks that level, there's definitely more room for this to drop. And again, this could be not because of all the dollar strength, but I think it's also because it could be more on that weakness in the European currencies. So pound dollar really is the one that, I'm just kind of watching here. And even, Rob, if you want to go to euro dollar too, it's a very similar thing. I mean, it's down to a 103 level. And I mean, I know every time we look at these levels, and some traders will look at the contrarian view and say, hey, maybe there's going to be a big bounce coming in. I mean, take a look at these levels. These are important key levels that, look at where we were in 2022 in September before we had that major run. I feel like, as dollar CAD is at 2015 highs, Aussie dollar and Kiwi dollar are at 2020 lows. What is it not at 2022 lows? The euro dollar and the pound dollar. So maybe there's a potential or a chance for a rotation there. Those are the ones that I'm watching. Like I said, we're still early. We got only 2 full trading days this week. As we go into next week, we want to continue paying attention to these key levels, because the break of these key levels is where we're going to get that confirmation that that's where the continuity is. So that's what I'm paying attention to, and then let's see what happens next week.
To wrap this up, in my opinion, and again, everyone sees the market differently. In my opinion, the market is a little muddy here, and it definitely looks like we're setting up for something. I don't know what it is, but it is super unclear at this moment to me. The only question I have this week is going to be, do the euro pullbacks get bought? If the answer is yes, then I think those are the trades to get back on. Euro Kiwi, pound Kiwi, euro Aussie, pound Aussie, stuff like that. If they don't hold, I think the only place for me to look is dollar yen. I think that's the only place for me to look for a trade. And even then, it's not a great setup. I need to get that breakout in order to get excited about it. So look, it's a new year. We've got 52 weeks, well, 51 weeks now, but we got a lot of weeks to make pips. Let's not be crazy. Let's not be stupid. Let's just be patient and trade our setups. Thank you so much for joining me, everyone. Have a great weekend. Goodbye, everyone.